Good morning, traders. I am Himalay Bhatia from the Financial Analyst, and in this module, we have been discussing about the candlesticks and its patterns. So, till now, we have covered the candlesticks in isolation, and we have also covered the two candle patterns. In this episode, we will be talking about the one candle patterns. So, let's get started with it. We will be following the same approach for our one candle patterns as well. I will be showing you the pattern and I will be giving you a set of criterias that is to be followed by you. So the first pattern that I will be taking up over here is known as the hammer pattern. Right. So this is again a bullish reversal pattern, and the criteria for this is the first criteria, since it's a bullish reversal, there should be an existing downtrend. All right. Now, how does the pattern look like? There will be a small body with a large lower shadow. All right. Now, this may or may not have an upper shadow. So, even if it has an upper shadow, then the upper shadow will be something which is negligible or which is very small. Now, there is an additional criteria over here. The additional criteria here is that the lower shadow should be at least twice the length of the body. All right, so the length of the lower shadow should be at least twice the length of the body. Now let's talk about the third criteria. Now again, for a reversal, what do I need in the market? Do I need the sellers in the market or do I need the buyers in the market? So of course, for a reversal to happen in this case and the prices to move in an upward direction, I need buyers in the market. So what will I ideally wish for? I will ideally wish for a gap up, buyers in control market on the day of the confirmation. Even in this case, we would not take our trade on the day of the pattern. We will wait for one more day. If it is a day chart, if it is an intraday chart, then we'll wait for one more candle. So buyers in control in this case. All right. If there is no gap up, then what will I wish for is at least a buyers in control market. Now again, let's cover the advanced point of view as well over here. On the day of the confirmation, what I will wish for is, of course, a gap up buyers, or if not a gap up, then at least a buyers. But the closing price on this day should be higher than the previous day high or the pattern's high. So over here, the hammer pattern's high is over here. So this candle should have a closing above the pattern's high. If it does not close above the pattern's high, so let's say that this is your hammer pattern, and then on the next day, there is a confirmation, bias confirmation, but it is something like this, wherein your closing is below the high of the hammer pattern. Then, in such cases, what is happening is the pattern becomes weak. It is not showing that the buyers are not willing to buy the stock above this level. All right, so it is creating some sort of a hindrance, it's restricting the buyers, and thus what we are wishing for is we are wishing for a buyer's confirmation, but the closing price should be above the pattern's high. All right, again, the color over here is something which is not significant, because what we have to do is we have to read the candle in isolation and we have to check who is in control. Let's take the fourth point. The fourth point over here is that on the day of the confirmation, as well as on the day of the pattern, the volume should be high. All right. So the third and the fourth criteria, you can see it is a constant criteria across all the patterns. Let's talk about the signal enhancements now. Now, if you wouldn't have noticed one thing, I never mentioned about the color of the body of the pattern. All right. Why is that? Because the color of the body of the pattern is something which is insignificant in nature. However, this will be taken up under your signal enhancement. So the first signal enhancement over here is that if it is a green body, then this is slightly better than your red color body. All right. So green is slightly better than your red. Again, even if it is a red body and it is giving you the other confirmations, the base criteria are getting fulfilled. It's not a problem. That can act as an entry point. But if it is a green, then that is taking a slightly more weightage over there. The second signal enhancement over here is that the longer the lower shadow, the much better. So at least twice is the base criteria. Above that, anything above that, even better. All right. So from here, what we can expect is a reversal in the market. Now, despite all the criteria getting fulfilled, what we do is we as a general practice put in our stop loss. So where will my stop loss be in this case? It will be the lowest most part of the lower shadow of the pattern. All right, so this will act as my stop loss. So this is a very easy pattern, nothing difficult over here. But now what I will do is I will be covering three more patterns which look quite similar to this pattern. All right, so you just have to identify which pattern is what. So the opposite version of a hammer is known as your hanging man pattern. All right. Let's take a look at the criteria. The first criteria over here should be that there should be an existing uptrend in the market. How does the pattern look like? This time again there will be a small body, but again there will be a large lower shadow. Alright, hanging man does not mean that there will be a large upper shadow. There will be a large lower shadow, and the second criteria also remains that the lower shadow should be at least twice the length of the body. Again, in this case, the pattern may or may not have an upper shadow, but if it does have an upper shadow, then again it is something which is negligible. Let's talk about the third criteria. The third criteria says that we need a seller's confirmation. So on the day of the confirmation, we ideally wish for a gap down, sellers and confirmation. If there is no gap down, then we will follow the normal seller's confirmation in the market. And finally, the fourth point, on the day of the confirmation as well as on the day of the pattern, the volume should be high. So that has been repeated quite a lot of times, that even if it is selling, we do not wish for a low volume, we still wish for a high volume in the market. Let's talk about the signal enhancements in this case. Now again, the color of the body is something which is insignificant for the pattern. However, checking it from a signal enhancement point of view, I will wish for a red color body over a green color body. So a red color body is something which is slightly stronger than your green color body in this case. The second signal enhancement is again the same. Longer the lower shadow, the much better. So the base criteria still remains that it should be at least twice the length of the body, but over and above that, if there is anything, then that becomes even stronger. So from here, what we can expect is a reversal or a downtrend in the market. Now, let's talk about the stop loss. Where should my stop loss be? In this case, many people tell me the stop loss will be over here. Okay. And if there is no upper shadow, then where will my stop loss be? Will my stop loss be this? Now, if I keep this as my stop loss, or even if there is a small shadow and I keep that as the stop loss, then what happens is the stop loss is very tight. It can immediately reverse. The prices for 1 or 2 days can come up till here and trigger a stop loss. So that is something which is not safe for a trader. Your trades will get easily hit, your stop loss will get easily hit, and you will end up making a loss than making a profit. So even in this case, what is happening is we will not consider this as our stop loss. Rather, what we will do is we will pick out the length of the lower shadow, place that above the pattern, and now that will act as my stop loss. All right, so in this case, the length was there, the stop loss was over here. In this case, you just had to pick the length of the lower shadow, plot it above, and that acts as my stop loss. So this is my hanging man pattern. Now, before taking you to the charts, let's cover two more patterns since they are quite similar. So the next one is known as an inverted hammer. Now, what is your inverted hammer? It is exactly like the hammer, only there is one small difference. What is that? So let's go by the criterias again. The first criteria over here should be that there should be a prior downtrend in the market. Now, the difference over here is the pattern itself. So there is a very small difference in the shape of the pattern. Now, what is the shape of the pattern? There will be a small body, but this time instead of a large lower shadow, there will be a large upper shadow in this case. Again, the second criteria remains that in this case also, the upper shadow should be at least twice the length of the body. All right. And in this case also, the pattern may or may not have a lower shadow, but if it does have a lower shadow, then again it is something which is negligible in nature. Let's talk about the third criteria. So again in this case, the third criteria what we will be looking out for is a buyer's confirmation on the next candle. So ideally we wish for a gap up buyer's confirmation. If there is no gap up, then at least we want a buyers in control market. Talking about the fourth point or the fourth criteria, on the day of the confirmation or the candle of the confirmation, as well as on the candle of the pattern, I will wish for a high volume. So if you just compare this with your hammer, it is exactly the same, just that the pattern has got reversed. So you don't have to mug up things over here. It's quite logical. Criteria is also repeating itself, so nothing to be mugged up over here. Signal enhancements, it is the same thing again. The first criteria over here is, or the first signal enhancement over here is that if it is a green body pattern, then it is slightly better than your red body pattern. And the second signal enhancement over here is that longer the upper shadow, the much better. So in both the cases, we can see that these are acting as a signal enhancements. Again, this is something which is not adding too much value to our probability, but criteria are the thing which are covering about 90% of the trade in all the patterns. All right, and from here we can expect a reversal in the market. Now what is happening is we will again place our stop loss. Where will my stop loss in this case now? Since I'm buying in the market and if the prices fall, then if the prices start falling, that will start building losses for me. So to protect my capital and stopping from further losses, I will put in a stop loss. And in this case also, what I will do is I will pick the length of the upper shadow, place that down below from the body, all right, not from the shadow. Even if there is a small negligible shadow, I will ignore that and I'll consider from the body. I'll take that length, plot it down below, and that will act as my stop loss. So this is a very easy pattern. Let's move on to the next pattern. So we had our hammer, our hanging man, and our inverted hammer. So the fourth pattern over here is known as your shooting star. Again, the criteria. The first criteria should be that there is an existing uptrend. So this is just the opposite of your hanging man. All right, not basis the criteria, just basis the pattern structure. So the first criteria over here is that there should be an existing uptrend. How does the pattern look like? There will be a small body with a large upper shadow. Again, this pattern may or may not have a lower shadow. If it does have a lower shadow, then in this case also, the lower shadow is something which is negligible in nature. Let's talk about the second criteria over here. The second criteria says that the upper shadow should be at least twice the length of the body. Alright, so that is also established. Let's talk about the third. Again, it is repeating itself. The third criteria should be that there should be a gap down sellers in control market. If there is no gap down, then at least there should be a sellers in control market. And the fourth criteria is that the volume on the day of the confirmation as well as on the pattern should be high. If any of the criteria fails, then we will avoid taking a trade over there. Let's talk about the signal enhancements in this case. So again, the color of the body of the pattern is something which is insignificant. However, if it is a red body, it is slightly better than your green body. So in this case, red slightly better than your green. Let's talk about the second signal enhancement over here. The second signal enhancement over here is longer the upper shadow, the much better. Right? So base criteria is there. The upper shadow should be at least twice the length of the body, but over and above that, if anything, then that becomes much stronger. And from here, we can expect a downtrend in the market. But again, let me repeat myself. Candle patterns are not to be used in isolation. They have to be combined with your other concepts. All right. So in this case, what is happening is a stop loss will be over here, uppermost part of the upper shadow of the pattern. So let's summarize this up. Right. So let's talk about on the left bullish reversal patterns and on the right the bearish reversal. So my first bullish reversal was my hammer pattern. How does my hammer look like? There's an existing downtrend. There's a small body with a large lower shadow, and this lower shadow should be at least twice the length of the body. Again, it may or may not have an upper shadow. The second bullish reversal pattern that we discussed about was an inverted hammer. So again, there should be an existing downtrend with a small body, but this time instead of a large lower shadow, there should be a large upper shadow. All right. So again, over here, the upper shadow should be at least twice the length of the body. Let's talk about a case over here. Your bearish reversal structures. So the first pattern that we discussed over here was your hammer pattern. Hanging man pattern. So in this case, there should be an existing uptrend and again a small body with a large lower shadow, wherein the lower shadow is at least twice the length of the body. And finally, we spoke about the shooting star. Again, in this case, there should be an existing uptrend, but the pattern will be inverted. That means there will be a small body with a large upper shadow, wherein the upper shadow should be at least twice the length of the body. So this is a summary of your 4 patterns. Now, out of these 4 patterns, let's talk about which pattern is stronger. So I consider the hammer pattern and the shooting star to be very strong patterns in the market. However, your hanging man and your inverted hammer are good patterns, but they are comparatively weaker than your hammer and your shooting star. So the accuracy rate over here in your hanging man and your inverted hammer reduces, but your accuracy rate in your hammer pattern and your shooting star is something which is high, provided all the criteria get fulfilled. So let's take up a few examples from the charts. I have opened Nifty 50 on NSE day chart. So let's pick out a few examples from here. Again, let me repeat myself. The volumes in investing.com is something which is showing you a wrong picture. And over here, we are just covering it from an illustrative purpose. All right. So in the first case, just look at this pattern over here, this candle, and think it through. Which pattern is this? Let's compare it. So it could be either of the two because it has a small body with a large lower shadow. All right, small body with a large lower shadow. Now let's try to determine the trend. Now over here, the primary trend as per Dow theory is an uptrend, and this pattern has been spotted in a secondary trend. That means in a corrected market. So I will consider this as my hammer pattern and not my hanging man pattern. All right. So if you aren't clear with this concept of your primary and your secondary trend, please go through the Dow theory module. Now in this case, there is a brief downtrend just before the pattern. So the first criteria for your hammer pattern is fulfilled. Let's talk about the second criteria. The lower shadow should be at least twice the length of the body. So it is pretty visible over here that the lower body is at least twice the length of the body. Let's talk about the third criteria. The third criteria says that on the next day I need a bias confirmation. Now there is bias confirmation and the close is also above the previous day high or the pattern's high. So which is a very strong indication. And finally, the fourth criteria, on the day of the confirmation as well as on the day of the pattern, the volume should be high. So in both the cases, you can check the volume was high. We can long the index over here, and from here, the prices started moving up. All right. Let's take one more example. So there's an existing downtrend. This resembles like a hammer pattern. So in a downtrend, it is known as a hammer. In an uptrend, it is known as a hanging man. So in this case also, this is my hammer pattern. Now let's talk about the second criteria. There's a large lower shadow, at least twice the length of the body. That is also getting fulfilled. Let's talk about the third criteria. Now in this case, I would have wished for a buyer's confirmation, but there is no buyer's confirmation. Rather, there is a gap down seller's confirmation in the market. What will I do? I will avoid longing the index over here. As simple as that. There is no trade. So basis just the candle pattern, there is no trade over here. Let's take out a few more examples. Again, there is an existing uptrend, but in that uptrend, we have small corrections in the market. So again, in this case, I will not call this as my hanging man. Rather, I will call it as my hammer pattern only. So this is in my secondary trend. So if you remember in the market structure, I had told you if the market is making higher high, higher low structure, which is happening in this case, higher high, higher low. So in such a scenario, we use the strategy of buy at dip. So that is what we are doing over here, buying at dips, and moreover it is confirming with a candle pattern. So in this case, there is a hammer, right? Existing downtrend, be it a brief downtrend, does not matter. There's an existing brief downtrend followed by the second criteria. The lower shadow is at least twice the length of the body. So it is very subjective over here, I understand, but more or less I will consider this as almost twice the length of the body. Now let's talk about the third criteria. Third criteria says that there should be a buyer's confirmation in the market. Perfect. There is a buyer's confirmation on the market on the confirmation candle. Finally, the volumes. The fourth is the volume. On the day of the confirmation, as well as on the day of the pattern, volume should be high. And on both the days, volumes were high. I can long the index from here. And from here, you can see the index started moving up. All right. Let's take another example. Now again there is a downtrend, so there are many examples of a hammer. Like I told you, hammer is a very strong pattern. So let's talk about it again. Now, this is an exclusive example over here, so please take note of this very well. Now there is an existing downtrend, so your first criteria is fulfilled. Talking about your second criteria, there should be a large lower shadow which is at least twice the length of the body. That is also getting fulfilled. Talking about the third criteria, that there should be a confirmation, bias confirmation in the market. That is also there, and the close is also above the patterns high. So that is an additional advanced point over here. Let's talk about the fourth criteria. Fourth criteria, volumes are also good on both the days. Despite all criterias getting fulfilled, I will not long my stock on the day of the confirmation in this case. Why? So this is a unique example because in totality, if you see, this is acting as my bullish engulfing pattern, wherein the green is completely covering the red. So in both the cases, so for my hammer, the day of confirmation is this. So let's look at the dates below. So for the hammer, a hammer was formed on 5th of August 2019. So the confirmation for that was 6th of August 2019. But now in totality, what has happened? On the confirmation day, it has ended up making a bullish engulfing pattern. So for that, what I will do is I will not immediately long the stock or the index, and I will wait for the confirmation of the bullish engulfing. So what I am doing is giving priority to the two candle patterns over and above the one candle pattern. So in this case, the confirmation for the bullish engulfing is not there, and thus I will not long the stock or the index over here. Good thing I did not do that, because later what has happened, so this is my stop loss over here, lowest most part of the lower shadow of the pattern. This is my stop loss. It went on to go hit my stop loss. All right. So this is a unique example, and this is to be understood very well. So let me explain this in a little more detail over here. So let's say that there is an existing trend, be it in a downward trend or an upward trend, does not really matter. If the first candle is a single candle pattern, all right, so let's say that this is your hammer pattern, and on the day of the confirmation, so let's say this is day one and day two, the confirmation is there, but it has ended up making a two candle pattern. So now I would not long my stock. Ideally, I would have long my stock over here. But in this case, I will not long my stock over here. I will now wait for the confirmation of the bullish engulfing, and I will disregard the confirmation of the hammer. Why? This is the evident example. So over here, it went on to hit my stop loss. Now, if we get a confirmation on this day, wonderful. I can take my long on the third day. All right. However, if we get a picture something like this, let's say that there is an existing trend. Now this time there is a red candle. Let's consider this to be a red candle followed by a green candle, all right, which looks something like this, and it has a large lower shadow. So this is my hammer pattern over here, and in totality this is my piercing pattern as well. So day one there was no pattern. On day two I get my hammer pattern also, and I get my piercing pattern also. So for both the patterns, the confirmation day is the same. That is your third day only, right? So confirmation over here is my buyers in confirmation. If the buyers are there, so I can long the stock on the confirmation day itself. So there is a very fine difference between the two. Let me cover this concept again. On the first case, what is happening is there is a hammer followed by a confirmation. So the confirmation for the hammer is the second day, but in totality now it has ended up creating a bullish engulfing. So now the confirmation day or the confirmation candle has shifted to the third day, but in this case there is no pattern on the first day, but there is a pattern on the second day. What sorts of patterns? So in your individuality, there is one candle pattern also, there is two candle pattern also. So your one candle pattern is your hammer pattern, and in your two candle pattern, this that becomes your piercing pattern. So for both the cases, say that as your hammer pattern or say that as your piercing pattern does not matter in this case. Why? Because in both the cases the confirmation day is the same. All right. So I hope this concept is clear to you. If it is not, please make sure that you note it down and ask me during your doubt clearing sessions, and I will clear it with you. So this is a very unique and an important example over here. All right, let's consider this. This is a shooting star. Why is this my shooting star? Because there is an existing uptrend and there is a small body with a large upper shadow. All right, so small body with a large upper shadow. In this case also, so there's a small deviation over here. The second criteria says that the upper shadow should be at least twice the length of the body. So this is almost twice the length of the body. Then I can ignore that small deviation in this case. The third criteria is that on the day of the confirmation, there should be sellers in the market. That is also getting fulfilled. And finally, the fourth criteria, your volume on the day of the confirmation as well as the pattern should be high. And from there, what has happened? The prices have started falling down. All right, so these were a few examples from Nifty. There are a couple of more. There's an existing downtrend. In this case, now there is an inverted hammer. Why is there an inverted hammer? Because it looks like that, wherein we have a small body with a large upper shadow. So my first criteria is fulfilled. Let's talk about the second criteria. The upper shadow should be at least twice the length of the body. So that is also getting fulfilled. Perfect. Let's talk about the third criteria. Third criteria says that on the day of the confirmation, there should be buyers in the market. Yes, perfect. There are buyers in the market. Talking about the fourth criteria, volume should be high on both the days. Now, on both the days, if you see, the volume is just shy of the average. So, like I told you earlier, small deviations are allowed. This is considered as a small deviations. It is almost touching the average. Not a big deal. I can take my trade over here. From here, what is happening? The prices have started moving up. Let's consider this case. There's an existing uptrend at the top. Now this is my hanging man pattern. All right, so in the earlier case the market structure was different. In this case the market structure is different. So over here there's an existing uptrend. How does the pattern look like? A hammer pattern, small body with a large lower shadow being at least twice the length of the body. Next day there is a confirmation, and on both the days the volume was good. I can short the index over here. So from here the price have started falling down. Let's consider this case: an existing downtrend, an inverted hammer followed by a confirmation. Will I long the stock over here? No, I will not long the stock over here. Why? Because in totality, it has created a bullish engulfing pattern wherein the green is completely engulfing the red. So what will I do? I will give priority to the two candle patterns over and above the one candle pattern. So in this case, I will wait for a confirmation for the bullish engulfing and not the inverted hammer. So I waited for one more day, got the confirmation. Volume on the day of confirmation is good. Volume on the day of the pattern is good. And from here, you can see prices have started to move on the upside. There was a brief consolidation before the prices started moving on the upside. Let's consider this case over here. There's an existing downtrend, an inverted hammer followed by a gap up confirmation. Now, again, there is the first criteria is getting fulfilled, an existing downtrend. Second criteria is getting fulfilled. The upper shadow is at least twice the length of the body. Third criteria, gap up buyers in control. And fourth criteria, volume on both the day is also getting fulfilled. Out of all, since all the criteria are getting fulfilled, I should ideally take a trade. But in this case, again, I will not take a trade. Why? Because the gap up is an unreasonable gap up. So this we had learned in our previous episode, that if there is an unreasonable gap up or a gap down on the day of the confirmation or candle of confirmation, then I will avoid taking a trade. It's good that I avoid taking a trade over here. Why? Because the market went on to go hit my stop loss over here. So these are very key small things that help you increase your accuracy. So make sure what you can do is, from a practice point of view, you can make a separate journal wherein you highlight these specific points where there's an unreasonable gap up, where there is a one candle, two candle conflict. All right. Let's take this case, an existing downtrend. There is a hammer pattern, but it is pretty evident that on the day of the confirmation, there is no bias in the market, and from here, I will not expect a reversal in the market, and I will not take my trade over here. In this case, there's an existing downtrend, but just before the pattern, there is a brief uptrend in the market. So now over here, will I consider this as my hammer or will I consider this as my hanging man? In this case, I will consider this as my hanging man pattern. Why? Because there's a brief uptrend and next day we get a seller's confirmation. Volumes are good on both the days. I can take a short position over here and from here, prices have fallen down. So let's quickly cover a few more examples. So let's take ICICI Bank. In this case, there is an existing downtrend. There's an inverted hammer followed by a confirmation. But now again, take note that this has ended up creating a bullish engulfing pattern. So what will I do is I will wait for the confirmation of the bullish engulfing, take the confirmation over there. Now in this case, again, on the day of the pattern, the volume was good, but on the day of the confirmation, the volume was just short of your average, which can again be acted as a deviation. You can neglect that, can take a trade over here from here, took a trade, the price is moved up. So you have earned nearly around 4 or 5 rupees of profit per share in this case. And this is your 15-minute chart. So this is a very big deal over here. 4 5 rupees for your 15-minute chart on ICICI Bank is a very good deal. All right. So this is not my day chart. It is very well highlighted over here. Let's take this case. There's an existing downtrend. This is my hammer pattern. We have the first criteria fulfilled, second criteria fulfilled as well. The lower shadow is at least twice the length of the body. The third criteria, we have a confirmation. And on both the days, there is good volumes. Or both the candles, there is good volumes. I can long the stock. Good thing I long the stock over here. The price is made a high of 401. We would have long the stock above the high of the previous pattern over here. So anywhere around 395. So again, we have a around 5 to 6 rupee profit within a couple of minutes over here. All right. So each candle represents a 15-minute price change. So it just took a couple of candles before hitting our target. All right. How is the target setting done? That has been covered in our other modules. Let's take Balkrishna Industries. Now this time this is a 4-hour chart. All right. So Balkrishna Industries Limited, India, 240 minutes. 240 minutes representing 4 hours, and this is listed on NSE. So let's take the examples given over here. Let's start from the right again. There's an existing uptrend, a hammer pattern. All right. So your first criteria is fulfilled. Second criteria is fulfilled, that the lower shadow is at least twice the length of the body. Now let's talk about the third criteria. We wanted a seller's confirmation in the market, which is not present. I will not take a trade. Now, is this my bullish engulfing? The green is completely engulfing the red. So is this my bullish engulfing? No, this is not my bullish engulfing, because bullish engulfing is a bullish reversal pattern, and the main structure of the bullish reversal pattern is that there should be an existing downtrend. All right, so this is not my bullish engulfing pattern. So I will not long the stock over here thinking that, all right, the hammer followed by a bullish engulfing and I will look for a next day confirmation. No, that is wrong, because the prior trend was an uptrend and not a downtrend. Let's take up this example over here. There's an existing downtrend. There is a hammer pattern, all right, with a large lower shadow covering at least twice the length of the body, followed by a followed by a confirmation. The close is also above the high of the pattern, so that is an additional point over here. And the volume on both the days or both the candles were good. Despite all the criteria getting fulfilled, the stop loss has been hit. So this is your failed trade. Clear? So failed trades are a part and parcel of trading. It does not really matter if your trades are hitting stop loss, but it's just that we have to try to hit more good trades than bad trades. So always focus on combining the concepts to take much more better trades in the market. Let's take up one final example over here. There's an existing uptrend. At the top, there is a shooting star followed by a confirmation. All right. But now in totality, it has ended up creating a bearish engulfing. So what will happen in this case? Again, the confirmation day will change, or the confirmation candle will change. So for the shooting star, the confirmation candle was this one. But now in totality, since it has created a bearish engulfing, so I will give weightage to the two candle patterns. And what is happening is, in totality, the next candle will be my confirmation candle. Volume over here was a little low on the pattern as well as on your confirmation. So just looking at the volume, I will ignore the trade over here if we are just considering the candle patterns. I hope this concept is clear to you. We discussed about very exclusive trades in this episode. So make sure you exclusively write it down, note it down somewhere, because this will help you a lot in your trading. In case of any doubts, feel free to ask your doubts on the WhatsApp community group, or we'll take it up in the doubt clearing session. I hope you have a good day. Bye bye.